Good afternoon, everybody. Welcome to Paul's Monday market update for Monday, 12th of February, 2024. I hope you're well. Hope you've enjoyed the weekend. As always, just before we kick off, it'd be great to know that those of you joining in the room, just make sure that you can actually see the slides, and more importantly, you can hear my voice. If you could confirm that the text working, I'd much appreciate that. That would be very helpful. Super. Thank you very much. Well, listen, here we are. Paul's Monday Market Update. We've got a rather interesting week ahead. For those of you joining us for the first time, the Monday Market Update is literally that. It is me sprinting through as much as I can get through in about 25, 30 minutes, basically looking at strength and weakness within the FX markets, looking at a few charts of a few instruments of interest, okay, that you might want to add to your watch list, and then we'll have a look at the live markets themselves. This is, it's not a trade signal service, it's not trade recommendations, etc. This is literally just my view of the markets, which may well be of help or interest to yourselves. As always, you're very welcome. Just remember that you are responsible for your own trading decisions. So just before we kick off, any of you in the London area, I'm going to be speaking at the London Trader Show for Active Trade on Friday, the 8th of March. I'll be talking about trading key reversals. If you want to join me there, if you're in London or town, you can do. And what you can see there is if you register, all right, you'll see and use the Active Trade 69, you'll get the complimentary ticket free. Furthermore, as always, I'll be doing my Monday Market Matters webinar at 2 o'clock this afternoon. If you want to listen to more, you can join us. Okay, just register using either go to their website or use the QR code there. Today, I'm going to be talking about trading a long or short squeeze. So maybe I'll see you there. Okay, let's kick off into the STAM, shall we? Let's see what's going on here. So, as always, I appreciate if you're just new to trading or new to joining, as it might look a little bit overwhelming, etc. But it's not. Once you get used to it, you'll start to see it very quickly. Here we are. What we're looking at is week 7 of the year, 12th of February already. It's going to be an interesting week. We'll in a week of Valentine's Day, maybe some of the questions will be, how much people may fall in love or out of love with Sterling and Mr. Bailey this week. When we look at that, what we actually have is pound. Okay, pound sterling has rallied its way back up to the top of the pile there. As I always say, I suspect it's more to do with weakness in others than real underlying strength in sterling. And we will find more out about that this week. We've got Mr. Bailey speaking today, I think later on about 6 o'clock. Tomorrow we've got unemployment numbers. Wednesday we've got CPI numbers, and he's speaking again, okay, Wednesday afternoon. Thursday we've got GDP numbers, and then Friday we've got retail sales. So the story is really all going to be about sterling as an FX trader this week in that sense, okay. So I think by the end of this week we'll have a little bit more, I would hope a bit more insight into terms of the direction of travel for sterling for the remainder of the quarter. I think what's basically we've had a little. I think there's a little bit, maybe a bit of a pump before the dump. A little bit of an element of the fact that Sterling, he might be under pressure to cut rates, but I suspect the Americans and the ECB will maybe cutting them earlier, and I think that might well be what is keeping Sterling kind of afloat. And it could also be said the same for Kiwi dollar. The Kiwi dollar had a bit of a bump there at the end of last week. A lot of that just due to the fact that domestic inflation is a lot stickier there than it would appear elsewhere. And actually, there's actually even there's talk about could actually go for a rate hike rather than a rate cut. I think you looked this morning. I think it was sort of like 44% is now sort of for a rate hike at the next meeting. Okay, so invariably it's a case of when the Americans and the Europeans and everybody else is looking to cut as soon as they can, well then invariably any outlier for that or alternative is going to effectively have an impact upon the FX pair, and that's what we've seen there in the Kiwi dollar. At the other end of the scale, okay, yen remains bottom of the pile. Although today, okay, the last 24 hours we've had a little bump of that, along with Aussie. It's a kind of a Japanese holiday and Chinese holiday, I think, today. So I don't think we'll see much movement in those really per se. Along with the Aussie as a proxy for China, and kind of probably what is interesting is that US dollar having bullied its way up to the top of the pile from the bottom of the pile, actually had a little bit of a sort of a little bit of a, what would you call it? Maybe a little bit of a plateau, okay, at the end of last week, which we will look at when we look at the charts here. What is kind of maybe not massively shocking is the fact that basically Swiss franc has the kind of weakness we've been talking about since the start of the year is actually starting to finally play out in the actual charts itself, which we'll look at in a moment. CAD kind of is holding on to that third position, and euros not really exciting anybody. Interestingly, if I look at sterling itself in terms of the trade environments, all right, from where it was very thin, okay, a few weeks ago, it started to get busy, but there is still an element of kind of an element there on the short side against the tactical shorts against the US dollar, but we'll look at that in the charts in a particular moment. When I look at the indices, no surprise, okay, they've been pushing higher. S&P and NASDAQ are now strategic buys, okay. Easier to look at that on the charts, and we'll look at one or two of the instruments of interest that'll play through into that. Whilst the Americans have been doing well, let's say the main three, FTSE continues to sort of just wallow itself. Maybe we'll get an idea or a view of that after Bailey's and speeches in the news this week. Then again, maybe not. Nikkei remains still strategic bullish, all right, okay. Interestingly, is that gold has gone kind of tactical bearish, and silver remains sort of strategic bearish there, although the price action is kind of on an intraday basis, we might get a little bit of a bump off that. So we've had a bit of a change, okay, in terms of sterling, Kiwi dollar, sort of wrestling the way to the top. How long they stay at the top is a very moot point. Okay, sterling might well indeed. Okay, that will, I think, facilitate this week. There'll be a lot of volatility there because we've pretty much got news pretty much every day of one sort or another. So watch yourself if you're trading sterling. Right, just make sure you know when the news is coming out and what's happening. But whether that pitch will stay the same a week from now, I'll be very surprised to see. I think those are just basically pumps before dumps personally, but we shall see. All right, so with that, let's have a look at some instruments of interest or some charts that kind of might be of interest. We don't really do massive amounts in commodities, but I thought it'd be interesting to look at this as a natural gas. This is a natural gas futures, and it kind of links into sort of the sort of some of the other charts we're going to look at today, namely that one of the reasons natural gas is in the news is because actually what we're doing is we are trading into lows that we've not seen for about 4 years, okay, since 2020. All right, you can see that below that sort of $2 level, okay, then invariably there has been kind of support there in the past over, if you look at that over the last sort of 10 years or so, but that is quite I was going to say sorry state of affairs, but if you're paying your fuel bills and stuff, and then your energy bills rather, that might not necessarily be. It might be quite a joyous picture in some parts of the world. But what we can see is from having the this is a monthly chart, by the way, all right. And most of my monthly charts this week, we had the run up to the start of the sort of Ukrainian war, and then actually we actually drifted down, but then we as that war carried on, we could see that actually had that huge run up there, and we literally tickled the soft underbelly of $10. But having gone from in the region of $2 to $10, we have worked our way back down there, okay, and we're beneath it. I think we're trading about 183 this morning on the kind of futures, all right. And part of that is maybe people just getting used to the one. Maybe used is not the right word, but people just accepting it and getting on with it. But also the kind of the sort of winter weather. The winter weather is not the kind of maybe the brutal weather we had a few weeks ago. That's kind of subsided. I know here today it's a lovely morning, lovely spring morning here. Always puts a spring in your step, literally, figuratively. And that kind of that cold weather and stuff invariably the way it ebbs away has a huge impact on supply and demand within that, and that's reflected in there. So I'll be interested to see, do we just basically bounce around here? It's acted as support, that region there. Okay, 150 to 2 and stuff has acted as as basically support. We're into there now. Is this now basically just gonna base itself out there? But I think the picture is also looking at how whatever goes up can come down just as quickly. Okay, and that kind of leads us into one or two of the other conversations we look at in charts. So this is cocoa futures. We've looked at it a little bit over the past. This is a monthly chart. I mean, we're going back here kind of 15 years or so, and you can see what's been going on there. So it's you can see there, that we are just under 5,900 there. Okay, from where we were back at about 2,200, 2,100, okay, 2,300, just over a sort of year, 18 months ago. And that, you can see that is, we're getting to a point of, almost trebling there in that sort of period of time. And you can see that for a good few years, we just, you might say there was a bit of an ascending triangle after a downtrend. But, what we were looking for is just how that kind of played its way out, and it's run its way up. And I don't claim in any way to be a cocoa commodities expert. Okay, I'm just a trader looking at charts. The learning point I try and get across to new traders is that once price has gone parabolic like this, if you're in, fantastic. Trying to chase it, don't be chasing it. Is generally a foolish thing to do, because invariably you're probably likely to end up just buying the top. But we can see that and think, and as I said, I'm not an expert, but there's been a lot of talk about the sort of failure crops in Ghana and Ivory Coast. There's the problems there. That's just effectively just really constrained supply. And also, I think the Ivory Coast won the African Football Cup, didn't they, last night and stuff? So you're not getting a stroke of work out of those lads this week, I'd suggest, and stuff. They'll be too busy still celebrating that, but they clearly won't be celebrating with a bar of dairy milk and stuff. But you can see for yourself there, that is just quite some move there, and they're not really unsustainable. And it'd be interesting to see what, if any, impact that is already starting to reflect upon in your weekly Toblerone, so to speak. But anyway, that's what we're seeing there. And as I said, if you're already in that, fantastic. Tighten your stops and go for the run. But if you're on the sidelines, itching to get in, if you're a new trader, it's invariably not a smart move, okay? Because generally the train has left the station, right? And invariably just end up buying the absolute top as a new trader. That's what tends to happen. So when you look at that, we then look at how that kind of reflects in other markets. And so this is NVIDIA on the monthly chart here. Once again, it's the monthly chart here, and I was fortunate that one of my systems gave me a kind of a buy signal at the start of the new year on that. But once again, you can see how that has gone from where we were really sort of 4 or 5 years ago, kind of $25. All right, I had another buy signal here off the bounce of the 50 around 125. But you can see for yourself, that is once again, that is price that is just going vertical. It's just going parabolic there. And we're now there. Look at that, even the pre-market up at what's that, about $727, etc. That is just quite magnificent move, all right? And that's what makes it the big boy of the Magnificent Seven. And I think even if you're not necessarily trading the stock, maybe you just bought it as a stock. It's having such a huge impact upon the on the indices, all right, that invariably, this just becomes a reflection of those indices, or in the terms of if the rug gets pulled on this for whatever reason, then invariably we'll see a pretty miserable correction on that. Okay, but that's not necessarily, we're not expecting that today, and that kind of links to the last chart, which is Cisco. Once again, this is the monthly chart, and Cisco have their sort of they've got their earnings later this week. I think it's middle of the week, and it's another reason for putting this chart up is that this kind of has there's personal reference to it. Okay, so as I said, this is the monthly chart, and for those of us of a certain vintage, namely me, I started trading during the sort of .com 99, 2000, etc. And I was, I'm the first to admit that I was a lucky punter. That's what I was. Okay, I was just lucky. I worked at the time, having just left the military. I worked in the kind of internet economy, and I did a lot of work with Cisco at that time. Okay, and pretty much, back here, as you can see in the late 90s. Okay, into 2000. Okay, this was going like cocoa. All right, this was going like cocoa. This was going like NVIDIA. All right, this was going like natural gas had been. All right, but you can see for yourself, how that basically, flew its way up. Cisco were out there. They were changing the world. We were all part of the internet economy. I truly bought into that and stuff working in that kind of economy there at the time. And you can see that share price and how it just absolutely went mad and rallied. Okay, but even that, we topped out there above 80, and you can see for yourself when we had the kind of dot-com crash. Okay, we came all the way back down here, to sort of sub 10. All right, sort of $8-9. Okay, people think that prices can just go up and up and up, but as I said, once the rug gets pulled, it truly gets pulled. Okay, and if I remember rightly, okay, I think this kind of this bottomed out was the start of the war of the Iraq. And that was it from 2003. All right, that was that was the kind of the low of it, and we punched up. Okay, and then we ran, but you can see for yourself, all right, there will have been lots of people who I suspect bought at those highs and waiting for price to come back. And here we are 20 years later, and it's got nowhere near there, right? And now, what we're looking at is I do look at that as a bit of a coil, but it could also be a head and shoulders, all right, a very scruffy head and shoulders, when we're kind of just pivoting around $50. So I'd be interested to see how that plays out. But this is the cautionary tale, all right, for people trying to, as I said, chase NVIDIA, chase cocoa, etc. All right, nothing ever goes up forever, all right. Nothing really ever beats gravity, and when it rolls over, when the rug gets pulled, all right, it can be pretty damn miserable experience. So so there you go. That's I thought that was a good chart in personal. It's got personal relevance, and also effectively, these the markets repeat themselves time and time and time again. Okay, and learning to understand how this kind of human behavior is absolutely crucial if you're going to be a trader with a long-term career. Okay, so that's that. All right, let's switch across to the live markets then. So just bear with me a moment, and we'll switch across. Where are we? Come on. Okay, so I'm hoping that you can still hear me. I'm hoping that you can. You can see the charts. Okay, so this is just standard indices. Okay, give me a drawing tool here. So Dow weekly, more of the same. All right, but a bit of a doji there last week. Okay, but certainly NASDAQ. All right, you can see just absolutely above 18,000 there. Okay. S&P, all right, more of the same. And that's the thing, S&P above 5,000. And let's have a little look at that, maybe in a little bit more. A quick look in that more of the thing. Oh, actually, I should have drawn it in. It's on my other charts. Namely just if you had asked me, I'm the first to admit, I've no issues admitting when I personally wrong. If back here, kind of sort of September, October of last year, if you'd have told me that that we would have been hitting 5,000 within like 4 or 5 months, I'd have probably said that was a very low probability event. But here we are, woulda, coulda, shoulda, and that is an element of when we saw this huge buying coming in. I think it was the end of last week of October, I think, if I remember off the top of my head, kind of last week of October, that huge buying came in, and look at the way we've gone since then. And we were just looking at like NVIDIA charts, all right, that's been pumping NASDAQ, SP 500, and Dow up there as part of those magnificent seven, and it is just quite something. It's a thing of beauty, and if you're in it, fabulous, absolutely. And there are still chances to work with that, but it's a reflection that it's those magnificent seven are really sort of, and actually it might be said 6 of those magnificent seven, because Tesla isn't contributing much. That is really just driving those American markets, and in the way that's driving the world we live in. I think last year, the kind of US markets accounted for 70% of all capital. It hoovered it all up, and that's this is the reflection of it, and the way that's playing itself out there. Russell hasn't played that game, but we are at least back above 2,000. All right, 2,000 has been the pivot. We're back up above it, right? And his question is, can it sustain that? So you see all of that bullishness. Well, you ain't seeing it from the FTSE. Last week is an engulfing candle, bearish engulfing candle there that's playing out there. And as I said, maybe we get more kind of more insight from Bailey. That would be a first, and then perhaps we drift our way back down to these 7,350 levels of support. All right, but there's not really anything there to get excited. Nikkei continues, bosh, 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 away she goes. Okay, absolutely hammering away there. DAX is hovering underneath those highs, isn't it? The price action there is not necessarily bullish. All right, not necessarily bullish. I would suggest there. For all the talk of how well the DAX is doing, the German, there's nothing but bad news coming out about the German economy. Really, I was hoping we'd get some elements of kind of the kind of phoenix from the flames, but if there is, that's certainly not occurred yet. Okay, and that's just showing how Europe is doing compared to the US. Oil, all right, oil's been interesting because we talked about it a few weeks ago in terms of how it was supporting that 200. We popped up there, and then we just had just kind of almost like a crazy week where we effectively just completely reversed that. There's just no real rhyme or reason. But then last week, once again, that weekly 200 is out and it's support, isn't it? And we're back up. And now I see us squeezed. All right, we're squeezed. The 200 there is sloping up. The 20 is sloping down. The 50 is going sideways. Remember what I always say? When price and those moving averages are all in the same spot together, it's the calm before the storm, or right, before we're getting ready to blow out, and that's what I look at that. If you look at that in gold, as I've said all year, we're holding above 2,000. We're holding above 2,000, right? Even if you're a long-term holder, but the price action isn't exactly getting me terribly excited. If I have to say, if I look at that for the last, well, you might say for the 6 weeks we've had of this year. I don't personally see any kind of real big sort of signal there to do one or to other. Really, I just see that as going sideways. There's ways to play that on an intraday basis on very, very short swings, but I don't see any kind of real any real kind of direction or joy to be had there. Bitcoin, interestingly, we pumped, we fell down, we filled this the gap here, and rallied our way up again, and we're rallying our way up to like 49,000. But if you go out to the monthly chart, there was a fractal there from when was that? From 2022, March 2022. All right, okay, we're up there. We're not. We're not breaking through it at the moment. Okay, we're not making. And I think part of this has also been maybe the kind of malaise in dollar for the last few days. Maybe that's helped it. But we're at an area where I think it's looking to make a decision 49,000 to 50,000. Okay, going to make a decision there, right? So we have to just watch and play what we see in front of us. All right, let's have a little look at the dollar here. Okay, we'll go dollar, and then might just skip to sterling. Okay, we're running a little bit behind time here. If we'll try and finish off on sterling, it's a big week for sterling, isn't it? So, excuse me. Looking at dollar, here we go. Dollar index then, weekly chart. Yeah, you've heard me talking about it plenty. But last week it's a bearish pimmer, bit of a rejection candle there. Okay, the strength had kind of ebbed. And if I go down to the daily chart, having had that was the NFP number, had a real strong boost, but it hasn't followed through there, has it? Now, of course, you could be saying, well, actually, Paul, bang, that's what we're just building up like a little bit of a bull flag. Yeah, it's possible, maybe. Last week when I saw it on the 4-hour chart, this is the 4-hour chart, and I've polyed up. That to me is a very nice, clear double top, okay, and there's swings down into it, and then we get a lower high. We haven't yet seen that full out. It's been a bullish start to the week, but I want to level about 103.80. I'd be sort of saying that to me is there's a zone there, 103.80. Is that going to act as support and push it back up to like above 104.50, right? Or we fall our way down into it. So once again, remember, we've got CPI tomorrow, American. We haven't already touched on that US CPI tomorrow. I don't think people are expecting the trajectory to be right, but the number could be a little bit of a difference just because the seasonal place that we find ourselves at the moment. But yeah, that is working its way down there. If we look on the flip side of it, at the euro against the US dollar, last week, we put ourselves in a bit of, that rejection, kind of the flip of what we saw in the dollar index there. Okay. And actually, we had a little bit of a dollar, a little bit of a dollar move there. It's that actually looking like a nice euro dollar there. We'll see what the markets are like tomorrow. Today, remember, everybody's been the Super Bowl, all the big boys. I think 1,500 private jets flew into Las Vegas for the Super Bowl over the weekend and stuff. They were talking about how they just couldn't park them. There was so many of them. So I think a lot of those big boys might be sort of sleeping off their Super Bowl hangovers. Whether that'll have an impact on the markets today, we'll see. But yeah, the trend is down, but we've had a little bit of a pullback. That kind of dollar sort of plateau, that dollar malaise and stuff, and that's what's kind of followed through into most of these elements. Last week we talked about how dollar yen. Okay, I figured it was just going to draft its way back up to 150. Japanese holiday today, but I would still be working on price just drifting its way back up there. That drifting its way up to that 150 level. Whether it has any value these days, okay, whether that's just completely that narrative has been bust, we don't know, but it's still a big round number that will attract a bit of work and trade in that. If I looked at Aussie dollar, I looked at that Aussie dollar last week. We pushed those lows, but actually, we closed a little bit higher. And that's, as I said, that is kind of that element of that sort of dollar malaise. And I'd be looking to see now, is that basically, for me, if we drift up to the 200 and reject, then it looks like that has to be a counter trend line break. Okay, and that would be more Aussie weakness and a bit of dollar strength. So I think in the next day or two, all right, we start to get maybe a bit of we coil up into a place where it's got to make a decision, and I'd be ready to watch that. And maybe CPI tomorrow is what gives us that. So, nothing terribly exciting about the dollar. All right, it's a little bit of malaise, okay, for the last week, and perhaps the CPI numbers will be what will give us the bump out of it. I'm just going to go to sterling. Okay, I appreciate I've kind of overrun a little bit the last few weeks, and I tried to. It's just there's so much to catch up about. All right, that there's always plenty to speak about, but the reality is, we're all busy people, so to speak. All right, so. Sterling. Okay, let's have a little look at a cable. There's some scrappy trades this morning. All right, but if I look at it, cable, look at that rejection off the 50 last week. Which would go along with the dollar index chart, the weekly, the euro chart, a couple of the others on the weekly chart. Okay, it's still part of a coil. That 50 there. Okay, bouncing off there. Okay, in a week when we've got an awful lot of sterling news. Normally I would be looking at saying that that's quite a bullish setup, but because we've got a week of just basically sterling news, I would be tempering that and waiting to see how it plays out. Certainly the dollar chart, which we talked about, had been just pivoting around about 26, around about 127. We've come down to the 200. We've popped up. The price action there isn't really getting me massively excited there. Okay, that's kind of a 4-hour chart, bearish morning there. Okay, that's no surprise if you looked at the intraday chart. We kind of have just drifted our way down there, right? But as I said, this is a week just to watch and shoot. All right. Euro sterling on the weekly chart. We've got beneath kind of recent lows there, but look at the price action there. I had thought we'd drift to about 85. All right, that's where I thought we'd drift our way down there, but it doesn't seem to want to do it yet. Even though the daily chart, the trend has been down, for the last couple of months, but it's there's nothing really exciting for me here. Right, this is basically beneath those kind of lows, but it's the price action there is just basically pivoting its way around. It's not giving me any kind of real indication or bias either way. All right, it's nothing really there for me to get terribly excited about. Pound against yen, we have last week we pushed up. Okay, we're still getting higher lows, right, but we're still not getting above those kind of highs of 2023, November 2023. Every time we get up there, and even today, it's just blood across. Even there, we've just drifting our way off it. All right, we can see at the end of last week, it doesn't want to get above it, does it? doesn't want to get above it. So look at all those rejection candles and Bosch, and that's just followed through this morning, which was nice kind of push through their trade on the intraday basis for it this morning. Pretty much. I think there's nothing really. There's for me. There's no real uh, trades leaping off the chart at the moment for me. Again, that's not really a surprise. I like to trade sterling. There's been a bit of a pump before the kind of news, and as I said, even dollar, right? Well, maybe CPI will give us a little bit wake up the dollar and give us a little bit of direction on that. So, when markets are a little bit messy like that, when there's no real clear signals for me, it's to sit on my hands and let the news, all right, to sort of kind of inject that volatility and see how that particularly plays out for us. Okay, so that would be my parting comments. Just keep your powder dry. Be prepared for volatility, and be prepared to sort of to certainly in sterling to see volatility left, right, and centre as the news comes out, and by the end of the week, maybe we get an indication of the true direction for that. All right. So, as always, ladies and gentlemen, thanks very much for joining us. I hope you have a fabulous trading week. All right. As I said, for those of you who want to join us, I'll be doing the Active Trades Money Market Matters webinar in about an hour's time. You're very welcome to join us. And if not, have a great trading week, and I will speak to you soon. Thanks very much, everybody. Cheers.